You've been hearing that the stock market has been absolutely booming lately, but you have no idea why or how to take advantage of it. Don't worry, I've got you. I'm here to break it down for you in plain English so you can jump on this opportunity. Now, I am personally up over $300,000 this month alone, but that doesn't mean that everything's fine. That just means there's a lot of money moving into the market. And I want you to understand why that's happening. First up, we have inflation. You know that thing that's been making your groceries and your rent more expensive? Well, that has been coming down. When inflation drops, people tend to feel more confident and the markets tend to go up. Second thing we need to look at is rate cuts. The Federal Reserve, the people who control the interest rates, they have been hinting that rate cuts may be coming later this year. Lower rates make it cheaper for businesses to borrow, grow, and hire. And they also make it more attractive to invest in stocks. Now, if you remember from my video 2 days ago, we know that the stock market and the economy are not the same. The stock market is forward-looking, and right now the market is pricing in 3 rate cuts this year. But here's the risk. If inflation spikes again, or these rate cuts don't actually materialize, the market could drop. Now, something else that's really important to be aware of is the fact that this rally isn't being driven by the whole market. It's actually mostly just a few giant companies. So if you are only investing in something like the S&P 500, like VFB in Canada or VOO in the United States, and you're thinking you're diversified, you're really just riding a few names. And that means if even just one of them stumbles, the whole market feels it. And now today we have the trade deal that Trump just announced with the UK. That news pushed stocks even higher, but the fact that one single headline could have this big of an impact on the market shows how emotionally reactive it is. And when people get too comfortable, typically that's when things snap. And this is where things like market indicators come in, okay? And no, you don't need to be a day trader to use them. You just need to know what to watch. The first indicator that I look at is something called the VIX. This is basically the market's fear gauge. When the VIX is high, that means people are scared. Over the last month, we've seen the VIX drop a lot, but that's not always a good thing, okay? When people get complacent, that means they might not be hedging against risk. And that's when a surprise can hit the hardest. And now another indicator that I like to look at is something called the RSI. Basically, this is just a number between 0 and 100. And this indicator tells us whether the market is overbought or oversold. Above 70, that means we are overbought and it might be time for a cool down. And right now, a lot of these big tech names are sitting above 70. Now, taking all of this information into account, this doesn't mean that we become stock pickers. This doesn't mean that we try to time the market. Instead, I became a millionaire at 30 by learning how to automate my investments, take emotion out of my decisions, follow a long-term investing strategy, and pounce on opportunity when I see it. And I know most of you weren't taught. That's why I put together my free 90-minute How to Get Rich in a Recession masterclass. In it, you'll learn how to get rich investing like the wealthy do. Grab your spot on my website under freebies.